We're live and recording, and welcome to a very, very exciting podcast episode today. We're talking to Joshua Harris, who's joining us all the way from the United States, who's going to talk about film financing, the entertainment sector, and just the excitement within the sector that he's actually witnessed from one of the events and markets that he's recently been to. We'll sort of delve deeper into the fund, some of the projects that they back, and then also a little bit about his background, and then some of the future plans that the fund has. Joshua, your message and your voice goes across to 100,000 folks within the Vitrina community. These are all the leaders, CXOs, and experts from the entertainment supply chain from 100 countries. So a very, very warm welcome to you on the Vitrina podcast.
Thank you, Atul. And it's a pleasure to join you. I appreciate it.
Absolutely. And just to get us started, Joshua, what would be again, just from an introduction perspective, we know that you are the president and managing partner for Peachtree Media Partners, but would be great to actually sort of maybe start with an elevator pitch for Peachtree, and then the entertainment aspect of it. If you can maybe start there.
Yeah, that's great. Thanks, Atul. So Peachtree Media Partners is a film finance lender in film and entertainment. So it's important for us to start off by distinguishing ourselves. We're not investing in film and TV. We lend in film and TV. So we take a collateral position against the film IP, any pre-sales, distribution agreements, or tax incentives that are offered for a film, and we loan against that piece of collateral. Now, sometimes what we do that's a little unique and different that makes us really special is we will take the value of certain territories or the value of distribution, future distribution, and before a distribution agreement or a piece of collateral is executed, we will take a nominal amount and we'll advance that to the production to make the film. The reason why we do that, and we'll get into this, is it enables the filmmaker and the producers to maintain control over the project, the creative aspect of the project, but more importantly, it helps them to maintain upside in the project and benefits not only them as producers and filmmakers and the talent attached to the project, but it also benefits us by taking a little bit of marginal risk in not having a full collateral pool and making a full collateral loan, which is what commercial banks are mostly doing. It enables us to put private capital to work at a much higher multiple, and when we're taking calculated risk, earn a bigger dividend for our investors. So that's kind of what makes Peachtree Media really unique and special. It would be easier for me to kind of start, Atul, talking about why we're doing what we're doing and my background in the space. So I've been in financial services for about 26 years, and the big majority of that focused in on film and TV and entertainment finance. And so prior to starting Peachtree Media and another company that I run that's a production company, a sister company that Peachtree Media utilizes a lot called Gramercy Park Media, I was an entertainment banker at City National Bank, which is, for all intents and purposes, used to be the official bank of Hollywood and Broadway until their merger with Royal Bank of Canada. And then they became much more like a traditional commercial bank. That created an enormous gap in the marketplace. And because they lost sort of their strategic focus on being an entertainment finance company that just so happened to offer banking products, to now they are a bank that just so happens to offer an entertainment solution, that creates this enormous void in a time period over the last 5 years, which we've seen a crazy amount of content explosion. Like, we are living in the content creation heyday. And even though we follow ebbs and flows of the industry cycle, and there will be comings and goings in terms of the players in the space and the consumer demand, the one thing that everybody agrees on, it's that these little devices here and the devices that you are on right now, Atul, and the one that's behind me, they're never going away. And as consumers, how we demand content is not going to regress to the point where we know we as filmmakers and producers, we have to have a supply and demand issue met. Otherwise, the consumer is it's too, because of social media and the vertical aspect of entertainment now, the attention span is way too short, and the consumer will simply move on to the next platform. So large streaming services and studios, they recognize, in order for us to keep consumer engagement high and keep subscriber bases high, which is how they generate revenue, they have to have a library of content always on demand for the consumer base. So I tell you all of that to put it in perspective, Atul. We have a marketplace that's never been as demanding for content and fast. Consume it as quickly as we can. We want it all now, now, now. And we have large commercial institutions that are staying exactly the same or retracting a bit in the space. And so that has created this enormous void of opportunity for private capital to stand up and raise their hand and say, hey, we know how to spend a dollar, and we're happy to invest it in the right mechanisms in which we can earn a decent dividend. And that's exactly the birth of Peachtree. So Peachtree Media Partners is a JV between myself and the Peachtree Group, which is one of the largest private equity firms in the Southeast, heavy concentration in real estate. And so we'll talk about the parallels between real estate and film lending. There's so many that make sense, which is why you constantly see those boundaries crossed. But Peachtree Group has now have this vertical that they are raising capital for. We are raising capital for to support the production demand in Hollywood and be that private capital partner that we've seen some of the domain capital, by way of example. If you ever watch big budget movies like Wonka, for example, and you see the Domain Entertainment logo at the front of it, Domain Entertainment is simply a vertical of Domain Capital. So you'll see that more and more. Redbird is now involved. I mean, heck, Larry Ellison and his team are now the proud owners of Skydance and Paramount, one of the largest studios in the world. So we see this crossover happening a lot between private capital and the demands and needs of the marketplace in Hollywood, and that's exactly what Peachtree Media is here to do: is to meet a supply and demand issue and do it in a creative, thoughtful, producer-friendly way that also works to mitigate risks.
Fascinating. No, that I mean, there are so many aspects that I'd love to sort of double click on and go deeper into. One aspect that I definitely wanted to sort of understand is the backstory of how you partnered with Peachtree, and how did that come about? Were they looking for an entry into entertainment? Were you looking for capital, and to sort of the gap that you talked about with City National? How did that partnership come about? What's the genesis of that?
Yeah, so my partners at Peachtree Media and the partners that run the Peachtree Group have been friends of mine for many, many years, and we worked together in a commercial banker capacity for many years prior to partnering together. And we started off I have another company that's a sister company to Peachtree that's a full production company. And again, we'll talk about the reasons why that strategic alliance makes sense for a lender to have a production company that they can lean in on. But through that production company, the Peachtree Group started doing equity investments into film. And I started this conversation off with one of the most important nuggets of information that we want to leave you with, and your viewers, is that we are lenders in the film space, not investors. There is a very big distinguishment between the two. And where we started this company was the Peachtree Group doing some investing, not lending, but investing in film. And they saw the benefit and the upside that the marketplace has. And quite frankly, when you're an investor in a film, in terms of the equity stack to make a film happen, that's the riskier capital. You are often sitting behind, as was my partners at the Peachtree Group, sitting behind a large commercial bank that is actually the least riskiest position in the capital stack for film and TV.
Right.
So the question was asked, wait a minute, why are we not taking the less risky position? And thus between everything that I already kind of articulated, which is the demand of the marketplace and the need for private capital, that entrepreneurial genesis of our company is literally what started it. It was, we should take the least riskiest, least path of release resistance into this marketplace because we do see the tremendous upside. We see the demand. We know the consumer behavior will never steer away from the need for constant entertainment and satisfaction from the need of content consumption. So we are, like we do in many respects at Peachtree Group, meeting a demand of the marketplace.
Understood. No, fascinating. Again, that completely sort of makes sense with everything that that we continue to see on the financing side or the investment side within the industry. One aspect that I wanted to also then understand was that there's been lots of waves within this industry just in a very short span. We've seen this whole onslaught of digital that's had one set of impact. The decline of linear, box offices getting some corrections. We've had COVID, we've had the strikes. In all of this, the whole sort of financing and the risk to rewards, equations have shifted a little bit. Talk a little bit about, how you've actually sort of seen the market move over the
Sure.
last few seasons.
Yeah, so the volatility that you're talking about is front and center in everything that we do in Hollywood. I think what you're describing is most impacted by the larger studio projects, right? The studio
That's right.
films where studios are sinking in an enormous amount of capital off balance sheet, on balance sheet capital for them into films. That's the riskier play, and those are the ones that are box office dependent. What
Yep.
we've done at Peachtree is we've tried to remove, in many respects, the need for a film to perform or overperform in the box office. And the way that we're doing, and so to your point, the volatility in the marketplace, particularly around a studio picture, becomes much more sustainable for a company like Peachtree who's
Hmm.
supporting independent film. And by the way, during the strikes and during some of the other volatile things like COVID, consumer behavior never changed. It never deviated. In fact, during COVID, consumer behavior actually was sort of a metamorphosis that
Yeah.
we now cannot live. We will never be able to go backwards, where we cannot live with a sustainable amount of library of content to go consume at any given point, and we need it all now. So we will never go back to cable TV days where it's like we got to tune in and we got to wait 7 days to see our next 30 minutes of our favorite show. Now we live in this world where we should be able to log on to our screens and have anything and everything, any genre, any type of story that we want to watch. We should be able to consume it right there on the spot. So to your point, the volatility that we've seen and the swings in the market that we've seen around box office have not changed the consumer demand,
Okay.
and they've just changed the way that we consumers consume. And so we speak to that directly at Peachtree by focusing less on the big studio projects and doing co-finance structures with the studio, and we focus more on the transactional independent film space. and during the strike, which was another big up and down for the Hollywood industry, I'm referencing the Screen Actors Guild strike, where actors said, we are not working on any projects that are affiliated with the studio until our contracts get more favorable. Guess what that didn't impact? It didn't impact independent film in a bad way. In fact, we were able to get SAG actors, A-list talent, to perform for non-studio films at historically low and favorable rates. And the reason for that is because they couldn't work on a big studio project because those were the struck projects. The independent film, though, which is run by the producers and the filmmakers and not by a studio, that was the heyday, right? Because all the talent wanted to keep a paycheck coming in. They want to keep working, but they can't work for Disney. They can't work for Sony. They can't work for Netflix. So what did they do? They shifted to the independent model. And an independent film, by the way, Atul, is only a film that is made regardless of budget without the presence of a studio. So that's by nature the definition of independent film is we're doing this independent of having a studio come in and finance the project or provide immediate distribution.
Hmm.
I say all of that to lay the groundwork of how we at Peachtree have been able to navigate the volatility of that marketplace. We sort of hedge our risk by taking on what we call foreign pre-sales, in some cases even domestic pre-sale, and we get a distribution agreement locked in from various territories around the world at a given rate, it's called a minimum guarantee. And then
Right.
we're simply advancing on that accounts receivable. We do that in conjunction with the tax incentive, which we get a certification for and an opinion letter for that says if they spend this money, they will walk away with this tax credit.
Okay.
And we monetize that as well. So
Okay.
really it's a form of glorified accounts receivables lending where we know we've got a contract in place with big distributors throughout the globe, diversified across multiple distributors, and we go in and we monetize those distribution agreements. What I was referring to earlier that kind of helps us. So that's what commercial banks are doing day in and day out, by the way.
Right.
And they're advancing against those distribution agreements and tax incentives, and they do it like clockwork. Where we level up from what a commercial bank does at Peachtree, and we get to that private capital hybrid model that we're describing now, is that we'll say, let's do some pre-sales to an extent, and then let's stop. And the filmmaker loves that because what that means is I don't have to completely sell out the world and know
Right.
exactly definitively what my project is worth. I actually get to roll the dice to an extent on some territories like the domestic territory, which is the most valuable, and leave that open ended and not pre sell it. And a
Ah.
company like Peachtree will come in and say, okay, we believe based off all of our algorithms and all of our due diligence and underwriting, we believe the value of this in a worst case scenario domestically is call it $1,000,000. So we will advance half of that or even less than half of that to the production. We'll say, well, we'll give you $500,000 now against the domestic sale to go out and make this project. And filmmakers, again, they love that model because that means that they'll then make the project. Once the project is completed, a completed film is always worth, that's done well, is always worth more than a project that's just conceptually a script. So we go out and we enable the filmmakers to take that risk on themselves and say, we think we're going to be able to sell this for X times 2 once we've made it and we have something visual for the distributor to see. So we do a calculated risk analysis where we say, well, here's the amount of risk that we're willing to go on. We need that cross collateralized against all other collateral in the deal and the IP rights. And then we'll make the film. Then we take the completed product and we go sell it for 3 and 4 times that amount on a market in a marketplace like the American film market.
Fascinating. And that the just holding back actually unlocks a completely different value maybe at a later stage, but it actually sort of all goes back into the film's revenues and earnings. That's
Absolutely. And again, it enables and empowers the filmmaker and the producers to actually get the picture made without giving it away to a studio or without giving it away to multiple distributors. They get to make their picture, show the product that they believe in, and then the price inevitably goes up. Think about it this way. When you're selling a condo tower, right? And if I'm a real estate developer and I'm selling a condo tower,
right.
before the tower is ever constructed, I could pre-sell units, but I'm never really going to sell that top penthouse unit. I'm always going to sell the 1 and 2 bedroom units in the tower
That's
that's
right.
on the lower floors because those we haven't started building the tower yet. Those are
Yeah.
the ones that are easier low hanging fruit to sell because they know we're never going to get more than this amount for that 1 bedroom. So we start selling those. Then we get the money to start building the tower. So then as the tower is put together and we have visuals of what the tower looks like, we can then go out and start selling the more lucrative 2 and 3 bedroom units and the ones on the higher floors that have the bigger balconies. And then and then we're raising capital that way. And then when the tower's done and it's the most beautiful tower you've ever seen, and you've got the penthouse at the very top of it, that's when the price of that penthouse has now reached its pinnacle.
Wow.
The same thing can be said for building a film from the ground up. We will pre-sell some of the lower territories that we know are never going to sell for more than X. We'll go and get those sold so we have some collateral. We have literally an accounts receivable to lend against. The tax incentive, which is that middle 2-bedroom unit, and we know that that's a solid number. We get an opinion letter, we get insurance on it. We lend against that, and we start building the tower. Then once the tower is built, the golden crown, which in film and TV is usually the domestic rights to the picture, the distribution rights to distribute it in North America, that's when you never will get a higher asking price. So that's exactly what we do, and we enable the filmmaker to build their tower that way.
Fascinating. I can see the cross pollination between the real estate part and the entertainment part come right there. That was a really, really exciting analogy. Joshua, one question that I had was actually two questions, related. So I'm given to understand that the projects that you support are in the range of about $5 million to $50 million budgets. I was wanting to confirm if that's still true. And then the related question was that, in your view, what's the right time for a filmmaker to actually approach Peachtree, for support? So
Yeah,
if you can
that's
answer.
Yeah, those are great questions, Atul. So to speak to the first one, the sweet spot for us, yes, we identify it in that 5 to 50 range. And
Right.
that's the budget size of the film. That usually gives us a transaction size of somewhere between 3 million and call it 35 million. That's the sweet spot. That's where we are, kicking out probably between 8 to 10 of those every year. There are the extremes, however, like the $80 million projects, the $100 million projects, where we will go in and co-finance with a studio where they'll put in some money and we'll put in some money. So we do have access. We did one of those, a Guy Ritchie movie last year that's coming out in 2026 called In the Gray with Henry Cavill and Jake Gyllenhaal. That was an $80+ million picture where we were just a nugget of money in that cap stack. So we will be able to do bigger pictures, but to answer your question, the sweet spot, absolutely, it's that 5 to $50 million picture range. And by the way, the reason why the $5 million is so important, not because we don't care about the smaller, ultra low budget independent films, those actually can turn out to be some of the most profitable films. The reason why is we are a bond lender. We will only lend when there is a completion guarantee on a project. And so this is a very interesting aspect that your viewers and your audience is going to want to hear. In the movie making business, the riskiest pictures are often those pictures who never complete. They never get completed for whatever reason, whether it's an act of God or God forbid, a cast member passes away, something like that. They never get finished. That's literally how investors in film can lose money the fastest, is without getting a completed product. The reason for that is a completed product usually can find a home. Even if it's just straight distribution, going straight to a streamer, there is a value, an intrinsic value in a completed project that we know we should be able to find a home for. Okay, so I give you all of that to give you the context.
Right.
We require at Peachtree, all of our films require a completion guarantee, which means a third-party insurance company, multi-billion-dollar insurance company, will come in and provide us an insurance policy that says, we promise your film will be completed not only on time, but also on budget. And if it's not, it's an insurance claim for you. So that gives us great comfort that the biggest single risk in movie making, which is that we don't finish the film,
Right.
we are not taking that risk because we have a completion guarantee backed by a AAA rated bond company that we will get a completed product. So that the reason why the $5 million mark is our low threshold is because it becomes financially insolvent for a film to afford the finance insurance and the completion guarantee on a $500,000 film or a $2 million film. That's not super sustainable. So that's the reason why our target is 5 to 50. On the flip side of that, to your second point, the main thing that's really driving us on getting good productions and having this constant pipeline is our relationships in the business. Whether it's me or the army of producers that work with us, or the agencies, which is our most critical relationship that we forged at Peachtree, is with the agencies, the WMEs of the world, William Morris Endeavor, UTA, CAA, the biggest agencies in the world driving this industry and the biggest distributors in the world. Our relationships are what will keep that pipeline full. So we are actually not in a position where we have to really think hard about sourcing pipeline. There are thousands of projects that want to be made and are yet to be made. Our concentration on is actually cherry picking the very best of those projects. And we're doing it in a thoughtful, intentional way, but also with scale top of mind. So we want to work with producers that have a great reputation, that have done movies before, that have worked on studio films before, but are looking for that edge to get their film made in an independent mindset. That is how we source our projects. That is literally going to the agencies and having a relationship with WME, who has the largest talent pool in the world, by the way. When they say, hey, we have a Russell Crowe psychological thriller that we want you to help make it, that is where we source our pipeline from, and that is where our opportunities are coming from. So the answer to your second question is we don't really take projects from the outside, and it's only because of those reasons in the first bullet point that we talked about that's so important.
Fascinating. This is it's so exciting, actually, just to get that piece of clarity in your articulation. Joshua, so I was very intrigued about the insurance policy that you talked about. In your view, are there specific insurance companies that specialize in the entertainment sector that actually then provide that guarantee or that sort of a policy?
Absolutely. So there are a couple of big companies that provide reinsurance to the actual Hollywood bond companies. So the Hollywood bond companies include Film Finances, Unify, Media Guarantors, Patterson James. There's a number of them out there, but they all go behind the scenes, excuse me, and get reinsurance from AAA rated mega corporations, so multi-billion-dollar corporations. So we would only take a bond from a larger insurance company like that.
Okay, fascinating. And then the other question which I had was relating to the collateral itself. You talked about pre-sales, you talked about tax credits, you talked about unsold inventory. In markets, and then you also talked about the holdback of the best markets, so that you can actually unlock value in those. Do you consider all of that collateral as equal, or there is a sort of a different yardstick for each of those types of collaterals?
That's a great question, Atul. So all collateral is looked at totally differently. There isn't really a uniform approach. And the reason for that is the financial strength of distributors and the financial strength of various jurisdictions that offer tax incentives is different. So we can't put on one particular speck of lens and look at it all the same. We actually have to go through and say, who is the distributor that's putting up this minimum guarantee, and how comfortable are we with their ability to be banked? That leads me to the interesting dynamic also that Peachtree has that very few, I'll say, other film finance companies and private capital have. We have a relationship with a large commercial bank where we take a portion of the debt that we loan to production. We take a very big chunk of that as what we're calling back leverage from that commercial bank. So remember when I talked about at the beginning of this, the commercial banks that are in the space and they're lending against pre-sales and they're lending against those distribution and tax incentives? We are not asking our investors in the fund at Peachtree, those private capital and family offices that are constantly knocking on our doors to participate in this fund that we're raising right now, which we're in a $50 million raise that we're scaling to $100 million by the end of next year. Because we don't need the entire lump sum of money to come from the fund. we actually borrow about 80 cents from our commercial bank, and then 20 cents comes from the fund. So $100 million fund actually spreads out to be about $500 million worth of pictures. And we lean in on the expertise and advice and counsel of the back leverage party, which is a large commercial bank who's been in this space for 100 years, since Hollywood's inception. We lean in on them as a second set of eyes and a second set of underwriting due diligence to what Peachtree offers. So, for example, our investors, Atul, they don't actually just get the benefit of Peachtree's expertise and my 350 million or 350 films that I've done, over $1 billion worth of pictures. They don't need to even lean in on that. Don't trust me. Don't trust the company if you don't feel comfortable. Trust us plus our large commercial bank that is taking about zero risk on anything. Trust them because they're also underwriting every single distribution agreement that we underwrite, every single tax incentive that we lend against. And if they don't provide back leverage against it, we don't either. So it really is a risk mitigation mechanism for our investors that are part of the fund to say, it's not just Peachtree's expertise. We are getting the benefit of a bond company, an insurance company who bonds all of those distribution agreements. We're getting an insurance and a completion guarantee. We're getting a commercial bank who's lending against the same collateral, their opinion and their analysis at a big global scale. And we're getting Peachtree and all of its fantastic resources of how they look at this film. We're getting sort of a triple layer of protection for the films that we are lending against.
This is it absolutely sounds like a rock solid foundation, just in terms of all of those aspects working together. I'm guessing that there is a compounding effect to just creating a safety net for the investment, for the
That's right. That's right. And so, I never like to just talk about the positives of our industry and the positive things of the fund. I also think it's important to put on the mindset of what can go wrong in this and what can happen. And I am transparent to a fault in many respects, which is why I'm based in Atlanta and not Hollywood itself, because I am not a Hollywood guy. I think the right question here in that vein, Atul, is where do things present the most risk? How are you getting the return that you're getting? Because it sounds to me very risk adverse. You've got triple layer protection, blah, blah, blah. Where can it go wrong? The answer to that, and that I'm volunteering on, on the basis of being fully transparent, is a timing issue. And that's it. Our likelihood of getting repaid from this industry is very high. The loss given default rate, and this is from our commercial banking partner, is actually less than 0.5% on these deals. So we often are only calculating a default on the basis of time. So we've tried to go, so that's the biggest risk here. It's not will we get repaid and how much will we get repaid. It's how long will it take to get repaid. Correct. And the reason for that is, and this is important, every distribution agreement has a notice of assignment. That means there is a ticking clock as to when that distributor has to repay us. So we know there is a definitive, and the same with the tax incentive. As long as the money is spent, the incentive is earned and it has to be paid out. The risk actually comes in, will the golden crown that I described earlier, that domestic distributor, will that distributor come on and release the film in time for all of those NOAs and distribution agreements and tax incentives to also have recovered? Now, the good news is tax incentives are not usually directly correlated with the domestic release of a film. Usually tax incentives are earned based off of spend. So we're good there. However, a film cannot be released outside of the U.S. until the U.S. is released, generally speaking. That is a right that we give the domestic market because the domestic market is king. So the risk there, and what I'm referring to, Atul, and the timing risk is if we finish the film on time and on budget, like the completion guarantee promises, and we've done everything and all of the distribution agreements that we've pre-sold, we check all the boxes and they're ready to pay us. we still can't collect on them until we lock that domestic distributor and they release the film, because our foreign partners can't release it until it's been released in the US. So
That's right.
that's the risk here. And in order to mitigate that, we are building in large interest reserves. Mostly 18 months is around the time frame that we know it's going to take to not only make the movie, but properly distribute the movie and market the film domestically. So we are building in a holdback of about 18 months of interest reserve, 15 to 18 months of interest reserve, based off of how much we're gapping. Are we gapping meaning lending against unsold territories? Are we lending against the domestic? And how long do we think it's going to take to deliver this project to a domestic distributor who will then release it in order to trigger all of the other payments that need to get made outside of the tax incentive? So all of that's a very long-winded answer to a question that I posed to myself, which is, what's the biggest risk here? It's timing. And how are we mitigating that risk? We're building in an interest reserve for a finite period of time that gives us some cushion, some boundaries in which we need to call. The other thing that's kind of cool about it, I won't say cool, that's the wrong word. It's kind of unique about it is if that time period goes over 18 months, we as the lender we are the first out of the film. So we are reserving the right to jump in and sell this film in a fire sale situation where, let's just say we're at month 17.
Yeah.
We still don't have a domestic distribution plan in play, but we've got a completed film and we're just still negotiating with Sony and Paramount and all these others. What would we do? We can do one of two things. We can either allow the default interest to start accumulating on the picture, which means we now own that picture in perpetuity until we're fully recovered with our default interest, something that some capital private equity partners are intentionally doing. We do not want to play that role. We are in it for the long haul, not the short-term gain. So in order for us to be good partners to the industry and to be a long haul partner, we want to do what's right for the producers and what's right for the industry and not bankrupt the picture into our own submission of our own library of content. We're not here to build a library. Instead of defaulting it into hell and back, we can fire sell the project immediately to a streaming service or someone else that's willing to pay and get us out in the time frame in which we elected. So that becomes the question for us internally when it comes to timing and the risk associated is, do we want to cut it short and just get enough to get out and pay ourselves back and move on with our lives? Or do we want to play the long game, charge a little bit of default interest, but not abuse the filmmaker and give it time to set with the right distributor at the right amount? We do get the glory of being able to make that decision because we are the senior lender in all of our films. We are the first. We have that first right of making that decision. So that is yet another risk mitigant to the biggest risk that we have, which is timing.
Got it. Understood. No, that's super clear. In fact, one related question, and before we move to Joshua, understanding a little bit about the fund that you're raising, the fundraising that you're doing at this point. I wanted to sort of look at the content stage. So even if you get a reference from WME, for instance, for a project that requires your involvement, where is that project in terms of its journey?
That's a great question. Yeah.
I mean, there's this every time that we speak to independent producers, there's a reference to a lot of these projects being the Frankenstein of
Yes.
of financing, of capital, and
So
I was
true.
very curious, on in terms of where is the sweet spot from a content stage perspective or a title stage perspective.
It's so true. There are so many films that get stuck in what we call development hell. And it's
Right.
that Frankenstein mentality where you're literally just trying to piece together the best monster that you can make. And
Yeah.
sometimes the monster gets made and sometimes the monster falls apart. You saw how many times it took for Frankenstein to come to life.
Yeah.
Our goal is to not get stuck in the Frankenstein mindset and have the monster never be made. Our goal is to get the film made. So oftentimes when we get pitched a project that's still in the casting phase, or they don't have, the equity in, or they don't know who their sales agent's going to be, oftentimes we will punt that ball down the field and we'll say, we love the idea, we love the genre, we love, the commerciality of this picture. Come back to us when you've got some of the essential pieces in place. The
Okay.
essential pieces for us, what's ideal for us is when a picture comes to us that's fully packaged. And by fully packaged, I mean there is a sales agency, a reputable sales agency attached, like a WME, for example, who's the cream of the crop, or the Black Bears, if you're talking about foreign sales, the Black Bears of the world, or the Film Nations of the world. They have the sales. They have pre-sold some of international. They have, obviously, in order to pre-sale, they have their key cast attachments, A-list and B-list cast attachments that drive actual economic value, meaning we can take that name and the genre of picture, take it to the marketplace and say, what would you give me? That's the value that we're going to need in order to sell the film. So they have sales agents attached. They have talent attached. They have a filmmaker, meaning the director, who has a history in the business, or at least knows, sort of creatively what their goal is in making this picture. There's a bond company that's been engaged who also believes in the picture. And, ultimately, it's nice when there's additional equity behind us as senior lenders in the space. We don't love to be the only skin in the game. We
Okay.
like for the producers to have a nugget of equity, or a third party to come in with a nugget of equity that sits subordinate to where we are, as a reinforcement that this picture, it's not just the producers looking at it through rose-colored glasses, but somebody else also is willing to invest in the picture while we lend to the picture. That's ideal. That's the package that we love to see. Now, sometimes it'll come just like that, and then sometimes it won't. So
Right.
that's the reason why we partner with companies like our sister company, Gramercy Park, who is out there literally acquiring the rights to scripts, building out the cast, attaching actual cast
Uh-huh.
members, and attaching sales agents, and taking it and packaging it so that we know that there's a reputable bond company, reputable sales agent, and reputable distribution agreements, and reputable producers already on the picture by the time it reaches Peachtree.
Understood. Understood. No, that makes sense. So, shifting gears, let's talk a little bit about your fundraise. Again, you sort of reference that you are in that journey at this point. How does it look like? What kind of ideal investors are you sort of looking at bringing on?
Yeah. I mean, I think our sweet spot is family offices and private capital. We are, my counterpart who's leading the initiative in the charge around raising funds. Her name's Emily Crook. She's the director here at Peachtree for this fundraise. She would tell you that for us, it's finding those investors who are interested in doing something a little unique and different that has a higher multiple, that diversifies their portfolio, that feels a lot like real estate, but actually is a little sexier in many respects, and fun, to do as well. A lot of our investors in the fund, they take great pride in the pictures that we put out. And so when we have a premiere at the Cannes Film Festival, for example, or at South by Southwest, and you see our team at Peachtree walking the red carpet with these filmmakers and these celebrities that are in our pictures, they take great pride in that, and they know, okay, that's my movie, that's my team. So our ideal investor is someone who is entrepreneurial. They see this opportunity for what it is. They want to diversify what they've invested in, and they want to participate in something that feels a little bit more influential and bigger than your average real estate transaction. And I use that word influential intentionally, because film and TV is something that scientific studies have proven is one of the most influential things in our lives as consumers. So we take that as great responsibility at Peachtree to make sure that we're putting out good content that both entertains and drives social impact. And that's another thing that our investors in the fund really take great pride in. They know that they're getting involved with a company that actually knows what they're doing, cares about what they're doing, and
Hmm.
puts their capital to good use in a social, socially driven way in many cases, and also just for the sheer entertainment factor. we've raised a substantial amount of money. We're closing in this year on our first, again, $50 million in the next, hopefully in the next 6 to 12 months, we'll close that out. We'll scale it to 100 million by hopefully the end of next year. And that, again, as I alluded to earlier, Atul, that gives us, it sounds kind of limiting, but it actually, with our back leverage partner, gives us about $500 million to project into the media space. So we're doing quite well with that. We've done somewhere between 8 and 10 pictures a year in the first 4 years of our inception. And we're scaling from there. The other thing that's kind of unique and different about us is that we tested this model prior to raising the fund. So we actually went out and we had a proof of concept that we said to all of our investors in the fund, you don't have to just take our word for it. Here's a historical database of films that we did off our own personal balance sheets and off the Peachtree Group's legacy. We did those without the fund. Now we're going in and we're, based off of that proof of concept, we're raising capital to allow other people to participate in what we're doing. And that is really unique and different, actually having something to pull from there and having the expertise that we do in the space and the influence that we have in the space, having a former banker who was in all of the right rooms for all the right years with all the right studio heads, leading the initiative, and the collaboration of a big company like Peachtree Group behind it with our third-party capital, private big commercial bank behind us. It's just literally a recipe for good success. So we're excited about it.
No, and again, we wish you all the very best for that entire fundraise. I was also curious about the nature of the investors. You talked about family offices. I'm sure high net worth individuals who are really passionate about films and movies. They count as well. Are these all strictly domestic US based investors, or are you open to taking money from international investors as well? What's been the track record in some of those relationships?
Yeah, most of our investors to date have been domestic, but that there's no really constraints around who we can take in into the fund. So yeah, I mean it's a great question for my counterpart Emily, and you can find out more information on our website and through reaching out to my team here. But there is no limitations in terms of where we can get investment from. We welcome all parties across all platforms, and we're dealing with ultra high net worth individuals, we're dealing with family offices, we're dealing with a little bit of all of it, Atul.
Fantastic. And then just as we come towards the last segment, I do want to talk about 2026. We are at the end of pretty much at the end of 2025. So a couple of questions actually. One is when you typically sort of look at the inbound projects that you're receiving, is there a specific genre or a specific theme that you are really excited about? Has that been a developing thesis? In saying that, oh, this always works and this just never works.
Sure.
It would be great to sort of understand that, and then also from a 2026 perspective, what kind of sort of mix are you expecting between theatrical, streaming, international? If you can talk a little bit about just the way those films are shaping up.
Yeah, that's a great way to wrap up our conversation, actually, is where 2026 is headed. The first question around genre and if there are certain filmmakers we love to work with, the answer to that is we are genre agnostic. We are about bringing good product to the marketplace. Now, historically, that has looked like action films, horror movies overperform. So you will see in our slate of opportunities, you will see a lean into action movies, thrillers, psychological thrillers, and horror movies. But we're indifferent in terms of genre. We will work with a filmmaker and a group of producers that know how to make money. That's our primary focus, is turning out a good investment and making good product. So I would say we've got movies in our slate. We're releasing on January 2nd of 2026 a movie called We Bury the Dead, which is an elevated zombie movie that got into South by Southwest, and then it got sold by a big domestic distributor. But we also had last year a biblical thriller called Mary, which was the prequel to the Passion of the Christ kind of storytelling. So again, we can go from
Yeah.
zombies to the mother of Jesus, and we're sort of agnostic as to what it looks
Excellent.
like. Yeah, we really do focus on the pictures that we know can be commercial, that have a built-in consumer base. That's sort of step one. As we work into 2026, there's not a specific targeted group that we would focus our efforts to collaborate with. It's really more about picking those projects that, again, cherry picking those projects that can be made for the right budget, that have a built-in audience that we know can be commercial. And by the way, speaking to the volatility of the marketplace, what I'm very happy to report back on after this most recent American film market that I attended in Los Angeles is that the entire base is really seeing the swing back to theatrical being the future of our business. So I breathe a great sigh of relief being a traditional film goer myself who loves to experience cinema in the mega complexes where you got 100 people around you feeling the same thing you're feeling, watching the same thing you're watching, and going through that experience together. I think that's the way film was intended when we first started seeing the cinema come to pass. That's where we are headed back, and I'm very happy about that.
Wow.
Most distributors now are looking for films that can play theatrically as well as then go to an at-home entertainment streaming video on demand type of model. So it's that we saw the pendulum swing during COVID and the shutdown where it was all about streamers. And now we're seeing the pendulum swing back to how can we we being Hollywood, diversify our revenue stream again by not missing out on all those consumers paying twice to see it once in the theater and then once at home on their streaming service. That is coming back around, which is changing the narrative now in Hollywood to say, we want movies that can play theatrical. And so that's what 2026 looks like for Peachtree. We want more theatrical movies. We want to pull families back into the cinema. We want people to go and experience these stories in real time together, surrounded by an audience that evoke emotion and imagination.
That is such great news, actually. Again, that makes me happy as well, just listening to that aspect. Uh, Theatrical has had a little bit of a struggle, especially post-COVID, but to sort of see that again revive and filmmakers really make an attempt towards that is absolutely great news.
Yeah, it's
Um,
coming for sure. And not just
Massive.
for the big studio projects either, like the Wickeds of the world. We will see a resurgence of independent film come back to the cinema. Now, here's the charge. We as Hollywood, we can't play loose with it because we have a very sort of definitive market now when the consumer knows what they'll spend the money to go to the cinema for and what they won't spend the money to cinema for. So we need cooperation from all fronts, both studio, streamers, and the consumer to actually support this initiative to bring them back to the cinema and experience film in a collective, experiential setting with other people.
Understood. Understood. No, that's super helpful to again just transmit out to the industry. My last question, Joshua, is to provoke some thought. Again, we've had a really exciting conversation, but I wanted to sort of also end with something for the independent producers who are sort of struggling. They're trying to sort of figure out financing and capital. I wanted you to think about three projects that came really, really close to getting backed by Peachtree, but eventually you actually gave a thumbs down. And I just wanted to sort of, you to articulate the reasons, in those, is there a typical reason why you like, finally take the decision saying that, nah, we're not going to pull the trigger on this one. Just want to sort of understand, what came close, but finally did not make the cut and why.
Yeah, sure. It's equally important as to what qualifies a film to be a Peachtree product as to what doesn't qualify the film to
That's
be a
right.
Peachtree product. The most important aspect that we're looking at when we pre-screen a project is the team around it. So sort of falls back to the 5 essential C's of credit, right? It's who's the management team that's driving this project. And by management team on a film, we're talking about who are the producers, that's ultimately the borrowers, who are the sales agents involved, and who's the filmmaker and the cast. if we don't have the right team in place, it's likely going to be a pass, because we have to know we've got a capable team that knows what they're doing, knows how to put out a good product, and can turn a product over. And that's the most important piece. Where we've said no on a, just call it 3 projects, to your question, has been a complete collapse in those things, or a complete collapse in the finance plan. So again, back to my earlier point, where we don't always want to be every dollar of the production need. We want somebody else to have skin in the game often. Sometimes we'll do it and sometimes we won't. More collateral means we'll take more, we'll take more of the piece of the pie. Less collateral means we're going to want to spread that risk around. Somebody's got to come in with equity behind us in a subordinate position. So where we've said no, Atul, is when that equity doesn't materialize or isn't real, or they can't bring that piece of it supplementally in to hit the finance plan.
Got it. No, again, super helpful. Like, this sort of goes out to sort of also almost guiding some of the producers in terms of what safeguard they should have.
Yep.
As they sort of build up their project. Joshua, I have to say this was such an exciting conversation. You're very, very articulate, just in terms of all your observations and especially around the thesis of the fund. Thank you so much for sharing in such great detail about all your observations, and most importantly, the good news about cinema and theatrical releases for starting for 2026.
Yes.
Right?
Get back to everyone listening. Get back into the cinema and experience film the way that it was meant to be experienced, which is in an audience of people evoking the same emotions that you have and feeling the same things that you feel. That's the most important piece. We don't want to all sit at in our living rooms and consume content that way for the rest of our lives, do we? We want to get back and we want to have a fun experience with a bag of popcorn and our closest friends and family, and experience film the way that it was meant to be experienced.
Amen. And absolutely agree with you on that one. Thank you so much for joining us today for such an exciting conversation.
Awesome. Thank you so much, Atul.